Hello friends, how are you all? I hope you all are fine. Friends, we are going to start our lecture series in economy. So friends, let's get started. The first chapter that we will discuss about the banking in India. In banking in India, there are many subparts. So we will discuss this all one by one. So friends, let's get started. The first is NBFCs, non-banking financial companies. Friends, when we talk about financial institutions, the financial institutions can be divided into two parts. These are banks and non-banks. But when you talk about non-banks, in non-banks there are various names like non-bank institutions, non-banking financial institutions, or non-banking financial companies. Friends, see, in different books you will see the different names, but don't get confused, these all are same. Now coming to the difference between banks and non-banks. First we will talk about similarities and then we will talk about differences. Similarities. Banks. A financial institution, NBFCs, a financial institution, accept different forms of deposits. This also accepts different forms of deposits. Lends to prospective borrowers. This also lends to prospective borrowers. Now coming to the differences. Accept demand deposits that like savings and current accounts. See friends, in banks we can open saving account and current accounts. Okay, that means whenever you want you can deposit your money and also you can withdraw your money whenever you want. But in NBFCs you can't do that. You can deposit money obviously, but you cannot withdraw it when it requires. Now coming to point number 2. Issue checks. Bank can issue checks obviously, but NBFCs can't issue checks. Here deposit insurance facility available, but here deposit insurance facility not available. Okay, now coming to some features of NBFCs. Under RBI Act 1934, NBFCs have to get registered with the RBI. But many NBFCs are registered under other regulators. These NBFCs are exempted from RBI registration to avoid dual registration. See friends, conventionally NBFCs have to get registered with RBI Act 1934, but there are exemptions. Like there are many NBFCs which get registered with SEBI or IRDAI or another like a chit fund acts. For these, to avoid a dual registration, they do not need to get registered with the RBI Act 1934. Let's talk about examples like venture capital fund, merchant banking companies, stock broking companies registered with SEBI. Okay, SEBI means Security and Exchange Board of India. Now coming to point 2, insurance companies under IRDAI. IRDAI full form is Insurance Regulatory Development Authority of India. Now Nidhi companies under Companies Act 1956. Chit fund companies under Chit Fund Act 1982. Housing finance companies under National Housing Bank of the RBI. Okay. So friends, now we will talk about RNBC. These are residuary non-banking company. Friends, it is a company obviously under Company Act 1956. It is also a class of NBFCs. Okay, but it is some special functions are being done by this. Main business is receiving deposits and lending money. Okay, it can receive deposits under any scheme, agreements or other, and lend money any manner. Okay, friends, thank you so much for watching this video, and do like the video and share it with your friend and comment for any suggestion, and subscribe our channel and switch on the bell notification so that you get notified our latest updates. So friends, thank you so much. Jai Hind.